What's up, Bullish Friends? Hope you guys are all doing well out there today. And I wish I had great news to bring to you today, but the market, as you've noticed, the crypto market is way down. The stock market is way down. I think we've already dropped like 200 points already this morning on the Dow. But the crypto market, which is what we mainly talk about here on this channel, has taken a big dip. And as you can see, by going through and looking at CoinGecko at the market cap is down 5.5% on the whole market today. It's $953 billion, so it's dropped well below that $1 trillion price point. And as we start looking at the markets, I mean, it's almost all red in here. Now, over the last hour, things have tipped up just very slightly, but mainly overall, if you look at it, it's just a sea of red, and we're not getting any relief on this right now. This bear market continues, and there are several reasons why this is going on right now. So I want to just dip into this today. Even though typically I talk more about the passive income side of this, this all plays in and it all ties together. So why is this bear market going on right now? What does it mean for crypto? What's it mean for your portfolio? And ultimately, what my plan of action is going to be. And I'll get to that by the end of the video. So let's dive into this bear market. Well, so 3 weeks ago, and I don't have the article pulled up here, but I'm going to get to this article here in a minute that I've pulled up, and I'm going to explain why this all ties together. But around 3 weeks ago or so, the federal chairman of the Federal Reserve, Jerome Powell, came out and basically said that they were going to try to force people to stop spending money to fight inflation. So they want to push the markets down, and they want people to quit spending as much money because they need to fight inflation. And as you know, the inflation rate currently right now is 8.3% in the U.S. economy, which is one of the big catalysts for this big push down. Now, 8.3% is massive. And it's actually probably more than that if you look at the prices of groceries and you look at the prices of energy and heating bills and all that. It's all way up. I mean, certain things are up 30 and 40%. But the way they calculate the CPI, which is the Consumer Price Index, it is done in a weird way that they used to do it differently. I'm not going to get into all that, but they do it in a way right now that it keeps it looking like it's not as bad as it really is. And the fact is, 8.3% inflation is terrible for an economy. Now, even if it would have came back, the CPI, even if inflation would have came back as 8.1, that's still terrible for the economy and not good. So we weren't going to get great news anyway. Well, the markets today specifically seem like they're getting spooked because in 1 to 2 days, so as early as 9/20 or possibly 9/21, we might get the full announcement here. But the Fed chairman, Jerome Powell, they're going to come out and announce rate hikes. Now, rate hikes help bring the markets down. Okay, because what they're going to do is, again, they're going to prevent people from spending money. So when they raise the rates, it keeps people from borrowing as much money. So for right now, I believe the interest rates I think they're 2.5%. I could be wrong, but essentially they're talking about raising these all the way up another full point right now, and that's what spooked the markets today. Originally, when they believed that the CPI was going to be 8.1 instead of 8.3, they thought we might only get a 0.5 rate hike, which would have kept the markets in check, and it wouldn't have burnt the markets as bad. But now they're talking about doing a full point raise, and that's going to be catastrophic for the markets. And as you can see, that's why we're reacting the way we are today, and that's why a lot of people are starting to sell off their assets. They're selling out of the stock market, and they're selling their crypto, and they're causing these prices to go down. Now, this article over here, and this is on CNBC, I'll put a link in the description below. This explains all about what they're going to do, why they want to do a full point rate hike, and what more it means for the economy. It's a really good read. It talks about some different things, and this isn't like a typical news source I use, but they actually have a pretty good article on here explaining what the Federal Reserve is planning on doing. And I ultimately believe this is what is pushing our markets down. It's what's hurting our markets right now. So take your time after you watch this video, go in and read that. It'll be in a link in the description below. Now, typically, they do, as I said, they do smaller rate hikes, which would have eased the market, and it would have caused things to not crash and perhaps hold steady right now. Again, still in a bear market, but these larger rate hikes, people fear them and they just freak out and start selling. Now, here is what my plan is going forward. And as you guys already know, on this channel, I do a lot of passive investing, and I do it in the DeFi space and crypto in general. But recently, I've been talking about several things I'm in. I'm keeping my money over in things like VaporFi right now, Horde, Drip, and yield nodes. And these are places where I earn a passive daily income in. So I'm keeping my money over there. And actually, let's take a look at the price of Drip today, just to kind of show you, because this is one of my favorite places. So Drip has not went down very hard with this news, okay? It just kind of stays steady, and the way the network's built, it's designed to stay pretty steady like that. So you're not getting massive dumps in here like you are elsewhere. In fact, people will probably move into these things for more safety right now. So I'm keeping my money into the projects I'm already in. I may put more cash into those coming up in the near future. And obviously, one of the big things that I'm doing, and not financial advice on this channel, but this is just what I'm doing. I'm keeping my money on the sideline so that way I can jump into the markets when they start to look like they're turning back up. So keeping some cash ready for when the markets look like they're going to bounce back again. Now, keep in mind that it could be a while before we see the markets bounce back up. I mean, if they actually do this 1-point rate hike coming up in the next day, you're going to see the markets dip even lower. And there are people predicting that the stock market and the markets in general could go 20 to 30% lower from where they're at, which obviously is terrible. But going back to what I said earlier, their plan is to make the economy dip down so that way they can get inflation under control. And they do it incrementally to make sure that the checks and balances are all working. And I'm not pro or against rate hikes and such, but the fact of the matter is that the U.S. and many of the worldwide economies printed the hell out of money over the last couple of years, and it's caused massive inflation spikes. And to get that under control, they now have to do these rate hikes to do it. So keeping my money on the sideline, getting that ready for when the markets start to go back up. They still plan on doing they plan on hiking the rates all the way up to something like 4.75% by the middle or end of 2023. So if that happens and we still keep going up there, we could see this dip in the market for quite a while. Now, there'll be peaks and there'll be ups and downs and all that, just like always through the market. But the overall cycle will keep trending bearish until we get this under control. So keeping money on the sideline. And obviously, finally, I'm spending less money, which is, again, what they're trying to get us to do anyway. They want us to spend less money to help fight this inflation. Well, I'm spending less money. I know many other families out there are doing the same thing, spending less money and keeping it on the sidelines. So right now, that's basically where I'm at. That's what I'm doing. I'm keeping these passive income streams going. But outside of that, I'm not playing around with altcoins or anything like that. There'll be a time and season for that, but I'm not doing that now. It's going to be something that I will jump back into in the future. Just keeping everything dry right now, keeping that powder dry on the sidelines. Anyway, guys, I know this isn't like a typical topic that we've been going through. If you like this kind of topic, just let me know in the comments. I'll keep putting out this kind of content. But, typically we focus on these passive income streams like VaporFi, Horde, Drip Community, and yield nodes, and all sorts of other things that we always get into. So But I just wanted to share this today. I had some insight to share on what is going on in the market. Don't freak out and don't panic, but also be careful if you're going to play around in this kind of market when the market is volatile like this. So hope you guys enjoyed the video. Like and subscribe, and I'll see you guys in the next video.